All right, so here's a look at IWM. We've seen small cap participation ramp up in recent weeks, Harold. So walk us through how we might, as traders, take advantage of this in the
Okay.
options market.
All right. So you're seeing my screen there, right?
Yes, we
Okay.
are.
All right. So I'm gonna go to the trade tab here on the upper left. I click on that. So here's our option chain. So we're doing a bull call spread on IWM. The small caps are starting to participate in this uptrend. So that's the reasoning behind this trade here. So I'm going to go out to the July 21 expiration. That's about 37 days out. So I click on that. And then here on the left side, we got our calls, right side, our puts. And what I'm going to be doing is I'm going to be doing some people call it a debit spread, but there's different names, but we'll just stick with bull call spread. So first thing I'm going to do is I'm going to buy this 185 strike. So I click on that, and I'm going to scroll down, and I'm going to go out of the money, and then I'm going to sell the 190 strike here for protection. So hold my shift key down, and so here's our trade there. So we're buying that 185, selling the 190. That's going to give us a dim. I'm going to lower that so it matches my numbers. We'll get to that in a moment. So 294 is the credit we're gonna, or not a credit, it's a debit. So we're going to be paying for this option here. So let's take a look at the numbers. So I'm going to click on confirm and send. And then again, here's the cost of the trade. There's our max profit. One thing I like about this trade here is our break even is a little bit lower than the price. Here's what the stock is trading right now. It's a little bit lower than that. Many times on a debit spread, you don't get that type of break. So I like that about the trade. So now let's decide. Okay, well, we like the numbers. What we see here, how much money we're going to put into this trade here. So I'm going to close that. Then I've got some notes here on the left side here. So with the debit spread or bull call spread, the calculation is a little bit different than we do on a credit spread or a bull put spread. So with uh, a bull call spread, what we're going to do is we're going to take uh, our account size. So I want to stick with that $2,500 level that we've been using consistently throughout our other option videos. So just kind of reverse engineer it. So a 2%, assuming a account size of 125,000, 2% of that is 2,500. Now we need to determine how many contracts we're going to buy. So we're going to take the cost of the option. So again, that's $2.94. You need to multiply that by 100 to get it in option terms, and then to determine the number of contracts, we're going to take the amount of money we're risking. That's the 2,500 divided by the cost of the option. That gives us 8.5 or 8 contracts. I'm going to change the numbers here to 8, and then let's look at the numbers again. Go confirm and send. So there's our, this is all, it's not going to be, it's going to be close to the 2,500. It's not quite there yet, but here are our numbers here. There's our max loss, our max profit. And again, that break even, that's what I like about this trade. And I'm going to send it off. So I'll click on send, and hopefully we'll get filled at that price here. I want to fill, don't have to be filled.